Good afternoon, Professor. My name is Jorge Urrego, and today I will present assignment number 1, involving in the creation of an investment portfolio with different type of assets that will be explained in the following slides. The following presentation aims to create a diversified investment portfolio by combining three types of assets. Subsequently, I will evaluate their performance and risk, taking into account their correlation and covariance, essential factors in selecting a well-diversified portfolio. In the traditional assets, three types of equity investment (ETF) were chosen. The first one is Vanguard Total Stock Market (ETF). Is an ETF designed to track the performance of the CRSP US Total Market Index. The ETF provides instant diversification by investing in thousands of stocks from companies of all sizes and sectors in the United States. The second one is iShares MSCI Emerging Markets ETF. This fund includes a stock of companies for countries that are not considered fully developed. And the third one is SPDR Portfolio Europe ETF. It's an exchange-traded fund based on the Stocks Europe (TMI) index, a market capitalization weighted index of companies from Western Europe across the entire market capitalization spectrum. The second type of assets chosen for the portfolio consists of bond ETF. Firstly, I select the Vanguard Emerging Market Government Bond ETF, which primarily invests in government bonds from emerging markets. These bonds are issued by governments of developing countries and are denominated in US dollars, which can reduce currency risk compared to bonds denominated in local currencies. Secondly, the iShares JP Morgan USD Emerging Market Bonds seeks to track the performance of the JP Morgan MB Global Core Index. This index measures the performance of bonds issued by corporate entities in emerging markets, which may include countries in Latin America, Asia, Africa, and other regions. Lastly, the Invesco International Corporate Bond ETF primarily invests in international corporate bonds. These bonds are issued by companies from various sectors and geographic locations, excluding those issued in US dollars. The third type of asset comprising the portfolio is referred to as alternative assets. Firstly, I chose iShares Gold Trust. The fund directly invests in physical gold. Each share of the ETF represents a proportional ownership of the fund's gold holdings. This provides investors with a way to gain exposure to gold without physically owning the precious metal. Secondly, the Global X Lithium and Battery Tech ETF invests in stock of companies involved in mining, exploration, production, and use of lithium, as well as companies dedicated to development of battery technologies and energy storage. The third is the iShares MSCI Global Agricultural Producers ETF. Invest in a stock of agricultural companies, including those engaged in food production, agricultural, animal husbandry, and other activities related to the agricultural sector. The next step was to evaluate our portfolio. A 10-year period from September 2013 to September 2023 was analyzed, and this assessment was conducted on a monthly basis. First, the month-to-month variation of each ETF was calculated. Then, using the variations of all the ETF in the portfolio, I determined the portfolio variation by multiplying it by the weight assigned to each asset. In this case, 49% was allocated to stocks, 26% to bonds, and finally 25% to alternative assets. This allowed us to obtain an expected return of 6.7% with a risk of 14.3%, representing moderate return and risk in the portfolio. The covariance metrics provide information on how the returns of different assets in the portfolio vary together. Covariance measures the magnitude of joint variation between two assets. The off-diagonal elements represent the covariances between assets. For example, the covariance between BTI and EEM is 0.16% and between SPEU and BTI is 0.19%. Positive covariances indicate that the return of those assets tend to move in the same direction. The most negative covariance in this matrix is between IAU Gold and VEGI Agriculture with a value of 0.01% that indicates a relatively weak and negative relationship between these two assets. The correlation metrics provide information about the linear relationship between the returns of different assets in the portfolio. Correlation varies between -1 and 1. BTI has strong correlations with several other asset classes in the portfolio, such as EEM with 0.70, SPEU with 0.83, and VAGI with 0.80. This suggests that the return of BTI tend to be positively related to those of these assets. Gold has relatively low correlations with other assets, which is as common as gold is often considered a safe haven asset that may behave differently than more traditional assets. The most negative correlation in this matrix is between IAU Gold and BIGE Agriculture with a value of 0.071. It indicates a relatively weak and negative relationship between these two assets. Finally, here is the trend chart with the ETF returns over the last 10 years. In red color, you can observe the trend of our portfolio during the same period. It is evident that the portfolio has lower volatility compared to some ETF assets in the portfolio, as there are no significant peaks in comparison with other ETFs. It has remained more stable along with its performance. Here are some of the conclusions from the current portfolio. First, effective diversification. The portfolio is diversified across different asset classes, such as stock, bonds, and alternative assets. This diversification can help reduce risk by not overly relying on a single type of assets. The second one is moderate performance and risk. The expected return of 6.7% and a risk of 14.3% indicate a moderate risk and performance profile. This might be suitable for investors seeking a balance between investment growth and capital preservation. The third is relative stability. The portfolio is lower volatility compared to some ETF assets suggests it has maintained a certain stability over time. This could be appealing to investors who prefer a more stable investment. And fourth, comparative performance. Comparing the portfolio performance with other ETFs indicates that it has maintained a stable performance without experiencing significant peaks. Thank you very much.